Hey everybody, welcome back to the channel. If we haven't met, my name is Jimmy. Glad you stopped by. In today's video, we're talking about beginner's mistakes. In day trading, there are 4 mistakes that I see beginners make over and over again. And the funny thing is, I made them myself when I was a beginner trader. So today I want to dive into each one of those mistakes and show you specific steps and ways to avoid each one of them so that you can become a profitable trader quicker. So mistake number 1 is not starting off paper trading. Too many traders take a look at the charts, make a decision, decide, I think I can do this, and they dive into live trading right away, take a big hit, or even blow up their account, and then they can't keep trading, so they fail right away. So you have to start by paper trading. Paper trading not only allows you to get familiar with a platform, just with simple things like order execution, understanding what all the buttons do, knowing where to place your orders and how to do it correctly, but it also gives you experience with just seeing price action, understanding where to possibly buy and sell, and just gives you more confidence moving into the live markets. So what I want to do is I want to open up my platform. I use TD Ameritrade's Thinkorswim platform, and I'm going to open it up and just show you how to toggle between the live account and the paper account, and then I'm going to log in and show you what the paper account looks like, and that way you, if you want to, you can then go to TD Ameritrade, download Thinkorswim, and give it a try. Okay, so I've got my MacBook open, and I've actually clicked on Thinkorswim and opened up the application, and you can see it's just a simple login box, username, password, but then you have this little toggle right here. And right now, if I logged in, I would be part of live trading, which would be real live money. Now, if I click this and toggle it to paper money, then it's a whole different ballgame. It's play money, you're not putting anything at risk, and you can gain some very good experience. So let's log in. Okay, so what it does is it starts creating the desktop, starts putting all the options together for the platform. Okay, so here we are. So as it brings something up, I'm going to put in something simple like AMD. And let's just bring up a daily chart on AMD. So here we are. This is Thinkorswim's paper trading platform. And you can notice the big difference here is this orange reddish tab up here that says simulated trading. This tells you that you are in the simulator and that you are not actually placing real live trades. Now what they typically do is they give you a cash value of about $100,000, which is play paper money, and it allows you to use the whole interface and take trades, and you can hold swing trades, you can perform day trades, you can really do anything that you want on this platform that you can do in the live setting. So I highly recommend this so that you can eliminate problem number 1, which is not paper trading when you start out as a day trader. All right, let's move on to mistake number 2, which is not having a trading plan. So many traders enter the market and they just start buying and selling at random points, and what you don't realize about this is that you're stacking the deck completely against yourself because you're introducing too much variability. You're not being consistent. So what you need to do is pick out a trading plan. There are lots of trading strategies that you can look at. Some of them are buying the break of a high, selling the breakdown of a low point, buying off support, buying off resistance. All these things, you can look at strategies. You could go to Investopedia, look up a strategy, and then pick that strategy and go paper trade it specifically for a period of time to see how it works. But the main thing is you have to be consistent. You have to do the same thing over and over and over so that you can measure your results. If one day you're taking a trade that's a break of a new high, and the next day you're taking a short position off a resistance point, that won't work consistency-wise because you're doing 2 different things. So if you want to be able to measure your success when you're starting out as a beginning trader, you got to make sure that you have a plan with one strategy that you can repeat over and over under certain conditions, just so that you can measure your success. All right, so now we're moving on to mistake number 3, and for that we're going to use the whiteboard here in just a minute.
But number 3 is having a trading size that's too large. Now what I mean by that is, say you're looking to buy Nvidia at whatever X price, and you just randomly decide, I think I'll buy 500 shares. Well, 500 shares of Nvidia, which is a larger price stock, is a whole different ballgame than buying 500 shares of a stock like AMD, which is trading in the 30s somewhere. So you have to have a way to pick the right size of shares for the given stock, but also for the given amount of money that you're willing to risk on that one trade. So we're going to dive into the whiteboard right now, and I'm going to show you a specific example of how to pick your share size based on a price of a stock and based on how much risk you're wanting to take on that trade. So let's jump over to the whiteboard.
And for this specific example, we are going to risk $20 on this trade. So we cannot lose more than $20. And this is our chart right here, a little miniature chart. So this stock pushed up, pulled back, and now as it's moving higher, I want to buy it at the break of this high, which is $15 in our example. So I'm going to buy at $15, and my stop loss is right here, which is $13. And if you don't know what a stop loss is, I'm going to put a link down below, and it's going to have a link to an Investopedia article about what a stop loss is. So I'll put that down below. Just check that out. But overall, $15 buying in, $13 is my stop loss level, and if you subtract those, you get a $2 stop loss, okay? So if we're risking $20 on this trade that we just chose, this could be 50, this could be 500, it could be 10,000. We're just choosing 20 because we're a new trader and we shouldn't be risking more than 5 or 10 or $20 per trade. If I divide my $20 by my stop loss, which is $2, I get 10. That's how many shares I would buy of this $15 stock to only risk $20. So $15 stock times 10 shares, we're looking at spending $150 on this trade, and the most we can lose is 20 because we only bought 10 shares and we would be exiting if it goes below $13. It's our $2 stop loss. So $150. If we lose this trade, we will be left with $130. That's the max loss is $20. So spending $150, we could leave with $130. We could lose $20, or we could have a gain, and that's the other side of your plan. So if this stock continues up, you also need to think about where would be your exit point. Where would you take your profits? That's something else to think about. But this whiteboard example is just specifically for how to find the right number of shares to buy for a particular price stock and considering how much you're wanting to risk on this one specific trade.
Okay, and for our final mistake number 4 that I see new traders making is not tracking your trades. This is a very important step in the process of becoming a profitable trader. What you want to do is get a spreadsheet out. You want to label the top, amount of stock you've taken, maybe the date, maybe the share price, what was your stop loss, the amount you were willing to risk. All these things you want to put into a spreadsheet, and you want to track them over time so that 2, 3, 4, 5 months from now, you can look back and say, hey, I am profitable. Here's my total profit. Here's my total loss. And then you can start to dissect even more and find out which trades were working and which maybe weren't. And you can start to weed out what you're not good at and keep what you are good at and become an even better trader. So what I've done is opened up one of my spreadsheets for some trading that I've recently been doing, and I'm just going to kind of show you what the spreadsheet looks like, and you can see what you think.
Okay, so I have a spreadsheet brought up, and what I did was I'm just tracking the number of trades, my ticker. I'm tracking some specifics about options, the stock price, share size, how much money each trade's making, just some different things about my trades. And what you can do is once you get your header set up here, you can come up here and you can choose to float it. And when you do that, it allows you to scroll through your sheet and always maintain this nice header, so you always know which column is which. And so you would just go through and just keep entering in all of your data. That way you can track it over time and you'll know specifically how you're doing. You'll know what dates you took action, you know when you entered and exited trades, and then you know if you won or lost on these trades. So it's a very good way to keep organized and tracking your profitability. That way you know very minute specifics about your trading style, and sometimes you start to see patterns, things you're good at, things you're not good at, and it just helps to more refine you as a trader and help push you towards profitability.
So there you have it, 4 mistakes that I see beginner traders making that I've made myself, with a little advice on how to maybe avoid those mistakes. So if you'd like to keep growing in the stock market, as well as see all of my trades, consider hitting that subscribe button so you can stay tuned, and turn the bell notification on so you can get all my latest videos. Thanks for stopping by, and we'll see you tomorrow.